I think it's recorded already. Okay. I used to be more on the residential side out of the gate up in Kokomo, Indiana, where I was born and raised. And I had a really great insurance agent. I mean, honestly, a really great insurance agent that was
Okay,
referred
let me
by another guy. What's that?
on. So let me.
Oh, you good? Thanks, Zane. Okay. Long story short, again, had a residential real estate agent that, or I'm sorry, now I'm confused. Insurance agent that was awesome, but when we started buying some stuff in Birmingham, essentially it wasn't the relationship never got sour. It just crossing borders and crossing state lines and everything it just started to throw things off a little bit. So of course this kind of goes back to what we talked about when we're talking about assembling your team. My broker Sam Zoldak, who y'all may have met or I've spoken about him before, introduced me to our guy Keaton Kennedy here that's on today. That's going to be speaking and talking about what he does. But when I spoke with Keaton, we sat down and if you notice, it's something that Rachel has mentioned where end of the day, Keaton is he's not 68 years old. He's not like drinking Mai Tais on the beach. He's got a hustle and grind to like make a buck like the rest of us. And so I personally appreciate the hustle because that's who I am. I'm a hustle guy. And so that's how him and Sam was like, you need to talk to this dude. He's like, he's hustling, he's go getting. And so we've became friends and now business associates since then. So Zane, you got anything to lead into that by chance?
Yeah, sorry earlier for cutting in on you. I was on the phone. I didn't realize I was off mute.
No biggie.
But no, I didn't hear a lot of that. But I'm looking forward to hearing what Keaton's got to say.
Okay.
And yeah, go ahead. You guys take
Cool.
it.
We'll spare you guys all the deets. Again, it was just a good little lead in. Again, Keaton is a great guy. The whole point of today is kind of like last week when we had Sam on talking about like all the ins and the outs of brokerage. Keaton's going to go into some ins and the outs of insurance, which sounds boring out of the gate, especially when I'm in the life insurance business, which is even more boring. But when you understand how there's actual value and there is ways to create arbitrage and leverage out of what we're doing, it becomes fun because there's creativity that's involved in when it comes to insuring real estate. So everyone, Keaton Kennedy, thanks so much for making it, man.
You got it. Yeah, I've got a little bit about to talk about, but what's college major in risk and insurance? Always kind of knew I was going to be in it. Um, Started out my career on the brokerage side in the E&S markets. Uh, I wasn't client facing, so I couldn't meet with guys like Nolan, so it drove me crazy. And then it came over to the retail side. I worked for Petra RMS based out of Birmingham. I don't know where all you guys are out of. Um, we'll do about 1.2 billion in written premium. We mostly based out of the Midwest, Southeast, headquartered out of Memphis. Um, but yeah, that's a little bit about me. I I understand that this is a real estate investment kind of strategizing phone call. So I just wanted to talk about what's the best way to approach insurance. Um, and I would say having as much information about your facility as possible is best overall. Your rent rolls, your loss runs, your current policies, so I can review your exclusions. Um, the the main point being exclusions. I just worked on a general contractor. He's doing kitchen and home renovations, and he's like, "Oh yeah, I got insurance." He's paying, I think it was 12 grand a year, so $1,000 a month. He was subbing every single thing out: carpentry, plumbing, electrical, whatever. He sends me his policy, and in the fine print, he has a all subbed work exclusion. He was paying $1,000 a month for a piece of paper, and he had no idea. So sending your current policies to your agent can help a lot because we can review your limits, exclusions, and your current rate. It would be kind of like if you didn't send your current policies, I can get you pricing, but it's like listing a home with no price.
But let me go into one thing on that too, Keaton, because if anyone can see what I've got pulled up right here, like let's just start from the beginning for a second.
Yeah.
I'll be honest, I didn't give Keaton a whole lot of forward about this, so that's why he's reaching. So sorry about that.
No, you're
But let's
good.
just imagine somebody like everyone in their own shoes is um they got a property under contract. Awesome. We're halfway there. We're halfway home. What actually Keaton and I, and maybe he's seen this or not, but this is what he asked me to create when I get a building under contract. I send him all of this information because, like he mentioned a second ago, the key is when it comes down to getting close to closing is, and candidly, this is one of the reasons why I left my previous insurance guy was because, and we were, Keaton and my other banker were at an event yesterday and we were talking about it. And my other guy was like scrambling at the 11th hour just to get the insurance policy emailed to my banker so he could actually fund the money. And it's like, dude, we're 36 hours from closing. You still haven't got the policy yet. So that's where with Keaton, he got that thing to the banker like 3 weeks before closing, which is totally different than what it would have been otherwise. But most importantly, getting a lot of the most information that you can find on the acquisition that you possibly can, because what that does is it creates velocity for Keaton and his underwriters in order to get them the most information, but for the underwriters to get you the lowest rate. Now, a step further on that, as you already know, we're trying to buy properties that are triple net, meaning that you as the landlord do not have the responsibilities. Now, I would like to challenge everybody to think a little bit differently for a second. And they would usually say, well, if I don't have to pay for the insurance, why do I care what the cost is? Right. And you're probably not wrong when you think that, myself included. I've done that in the past. But what I've discovered, and Keaton, maybe you can go a step further on this. What I've discovered is when I present my tenant a couple different options, especially when Keaton said, hey, look, you can have this rider, you can have that rider. You provide them a little bit of a la carte of things that they can purchase or take away or whatever. Not only does it create a more customized plan for the tenant as the business owner, the one that's occupying your space. Second, it also looks that your tenant looks at you as a landlord, like knows that you actually care about their business. You're trying to reduce expenses. But again, in my opinion, when I go back in the next year and say, hey, buddy, I know you got 2 years left on your lease. Do you want to go find somewhere else? Do you want to start talking about renewing your lease? So it creates this rapport with your tenant versus some out-of-state landlord that just does not care. All they hear is triple net and they want to buy it at a high cap rate, right? So what I've discovered is I just want to let my tenant know that, hey, I'm doing everything that I can to extract as much juice as I can just out of the insurance side. That way that they know, hey, my landlord cares about me. He wants my business to succeed. And if I decide to go somewhere else, I might not have that same relationship with my landlord. Keaton, you got something to follow on that?
Yeah, I think kind of what you said about presenting different options. Like I just did your flood on the building in
Yeah.
Tarrant. I presented you the option of, hey, it's 4,600 for a $2,000 deductible and it's 4,200 for a $10,000 deductible. Which one would you rather have? It just depends on what you're comfortable with. But I'll also say you have to find your guy. And it's a relationship business. In the past, everybody wanted to have multiple agencies. They thought that leveraging agencies against agents was the best case scenario. When in reality, our best option is when you have your guy that you trust, we can leverage carriers against carriers. So let's say we can leverage Nationwide against Travelers, so they're competing on rates rather than my agency is competing against a different agency. What people don't understand from the insurance perspective is if you're working with multiple guys, I am blocked in certain markets. It's kind of first come, first serve. So let's say it's me and Jake from down the road at another
State
agency.
Farm. Jake from State
Yeah,
Farm.
Jake from State Farm. So you come to me and let's say it's a warehouse lessor's risk. I know that I have a couple markets to go to, and I go to those 3 or 4 markets. We've already got it out to the underwriter. They're working on it. We're waiting on rates to come back. Then you talk to Jake, and yeah, I'll help you out. I'll work with you as well. Well, Jake is blocked from the 3 markets that I've already gone to. So there's no competitive advantage of using multiple agents. Like I said, it's best to find your guy, somebody you trust, you build a relationship with. Most businesses have a lawyer, an attorney, lawyer, an accountant, and an insurance guy. And you got to find those 3 guys and roll with them. And that's going to set you up for the best possible scenario to where I can leverage carriers against carriers and present you multiple options, if that makes sense.
No, it makes total sense, and that's really the key out of the gate. Again, I look at it, and especially when I'm looking at new property, I really it sounds almost like self-centered, but I just don't care usually about what like the cost of insurance is.
Yeah,
And
yeah.
one of my mentors was like, actually, if you can position yourself as wanting to help your tenant reduce expenses, it ends up keeping them more of a sticky tenant when renewal comes up. So go over, Keaton, if you don't mind, because go over the situation on our Tarrant deal with like the flood. So I'll give a quick backstory. So I've got a building over in Tarrant, which is like northeast Birmingham. It's a pretty big space. It's like 70,000 feet ballpark, give or take a little bit. And a little tiny corner of that thing is in a flood zone. So of course, the bank requires me to insure the whole freaking thing, which is annoying. And I went to my tenant because, as I said, my tenant usually has to pay all those expenses. But I was like, and this is where you can come into play with your expertise, Keaton, is he goes, hey, my tenant says, I don't want to pay the flood insurance. It's like whatever the cost was, like $4,000 or something. And that's the one thing that I actually have to pay. That's my cost out of pocket. And he goes, I don't want to pay it. And now when he doesn't want to pay it, I almost want the whole thing to flood now because I'm paying for it. I want all their product to flood out now so I can get a check. And he doesn't because he's naive and he's short-sighted, but that's not the point. That sounded like a jerk. I shouldn't have said that. But what I'm getting at is when it comes down to the property insurance, it's different than the flood insurance. Can you kind of go into the differences between one and the other and how that relationships works with the tenants?
Yeah, so most of your commercial property coverage is not going to include flood on any level. And the catch with Nolan's building in Tarrant is there's one lot next door and part of the building in a flood zone. So due to the bank, you're required to have flood insurance. Flood is relatively cheap, especially in comparison to the property itself. The insurance market's been driven by property the past 3 years, really. It's just nothing but increases. And through FEMA and NFIP, there's going to be these zones where you're required to have flood, and flood is separate from your package policy, I should say. It's not that difficult. It's just a matter of finding your rate. And like I said, trusting your guy. Nolan had his guy was in Indiana, is that right?
Indiana. Yeah.
Yeah. And so I'm like taking his word for it on what was previously written, but the guy's from Indiana. He'd never been to the facility. And I go over there and I call Nolan and I'm like, I think you have way too much coverage. I mean,
Yeah, you did that. You said that. Yeah.
20 something thousand square foot building, but in reality, there was about 1,200 feet of office space in it. So if it floods, it's slab on frame. It's steel and concrete, except for the 1,200 square foot office facility. So, like I said, with trusting your guy, uh, we cut his coverage in half, um, and finding somebody that's that has expertise in the area or is within an arm's reach of reviewing the property and knowing the area is definitely beneficial.
Yeah, and you can tell that also the flood insurance, which again, we're talking about insurance guys. So I think it sounds boring, but it's an important piece as everyone's moving forward. But you notice that even though that it's not going to make or break the bank, depending upon your premium being 6,000 or 3,000 or somewhere in between or whatever, as we always say, if you save the nickels and dimes, the dollars will save themselves. If you focus on the tiny little pieces of accounting in your business and you focus on what's going to happen down the road, you build this relationship with somebody that gets their eyes on it. And he's like, dude, somebody that was from out of state says, hey, all I'm looking at is just the footprint of the building. This is what I think based upon my previous experience in Indiana, which is a totally different state, which is a totally different market, different topography, a whole lot of differences that he's not inexperienced, but just doesn't have the same fortitude or understanding about that particular location. When you get a guy that's on the ground that walks the side, I mean, Keaton went out there, walked the side, I mean, sized it up and was like, dude, he called me. He's like, dude, I think that you're way overpaying, dude. And it wasn't like big league, but think about it. If I was paying 7,000 in flood insurance and he got me down to 4,200, that doesn't sound like a big deal, but he just reduced my cost by like 40%. You know, in anything, no matter if it's at a zero to that, that's a big number.
Yeah.
So it's important depending upon the percentage of which that small that the expertise and that local geographic can impact, your bottom line. Again, you save the nickels and dimes, the dollars would save themselves. What do you think about that, Keaton?
Yeah. And I can kind of roll off of that into, really the three main factors of your insurance pricing. Your roof is going to be the number one, probably most asked question by an underwriter. Roof age, roof type, and the square footage of your roof. Then I would say it's kind of electrical, plumbing, HVAC will come after that. Um,
So three
and
things. So
roof,
roof number one,
roof
roof.
number one,
Yeah.
electrical two, plumbing three, and your HVAC four. And what I'm seeing is, if the roof is unfavorable, let's say it's 25 years old, um, sometimes they will rate it as an actual cash value rather than a replacement cost. So
Elaborate on that, please. Elaborate
yeah,
on
yeah, I'm going to get into that. So actual cash value. So let's say, um, I'll use a car for example. Let's say you buy this car for $10,000, and a couple months later, it's worth 5 grand. Actual cash value is adding in the depreciation. So some of these carriers will rate your roof as actual cash value, which you need to be aware of. If you wrecked that car and it's rated as actual cash value, they're only going to give you 5 grand. If it's rated at replacement cost, you bought this car for 10,000, they're supposed to replace it with a new item of similar quality. So if you're rated at a replacement cost, you bought this car for 10 grand. Let's say your deductible is $1,000. The insurance company is going to give you 9 grand rather than the 5 grand of actual cash value. So that's really the difference. The difference in replacement cost is they will replace it with something of similar kind and quality, and actual cash value will only replace the value of the depreciated asset.
Understood.
Um, and then I'll say that higher deductibles are definitely attractive. And I've got an example actually.
You want to
So
share with you? I'll make you the host if you like.
do what?
I can make you the host so you can actually, if you'd like to share your screen, I want to.
Oh no, I've just got scribble scrabble over here
Okay,
that
no biggie.
to kind of remind me of what to roll off of.
Okay, all right.
But yeah, the higher deductibles are definitely attractive. Really, I would say the highest you're comfortable with, or the highest that your tenant is comfortable with. I assume y'all are all trying to triple net. So I was working on a property this week, um, for two 5-story facilities in central Mississippi. The quote came back at 180 grand with a $10,000 deductible. Well, he's pretty well off, so we switched to a 50 grand deductible rather than 10, and it dropped his rate to 116 grand, saving him like 60 something thousand dollars a year just because he had that 50 grand set aside. So I would almost say it would be in your favor to have some sort of percentage of your rental income and be putting it to the side, and maybe like a high yield savings or a savings account of some sort, because he had 50 grand he put in a high yield savings account that's paying him $2,000 in interest a year and saving him 64,000 dollars a year, uh, just because he's willing to take the risk of the first 50 grand if there is a loss.
Yeah, I want to go a step on that though. I would like to, as I'm sitting here talking, I like to challenge you and think about this. As I discovered in my life insurance business, there are no deals in insurance. You push one lever, you got to pull another one, right?
Right.
So you reduce the deductible, you increase the risk essentially,
Premium.
right? Or vice versa.
Yeah.
So can you elaborate on that deal where to, hey, we went from a 50,000 or from a $10,000 deductible to a $50,000 deductible. Sure, it reduced his premium, but he increased his risk. Is that correct? How so?
Correct.
What does that risk increase look like?
So it makes your facility or your properties more attractive to these carriers because it shows that you're willing to take on the first bit. So similar as it's beneficial to package your properties together, including different lines of business, you're going to get a better rate overall if you package together, let's say, your property, your GL, your auto, and your workers' comp. Nobody's writing new monoline auto right now at all because they're unprofitable. However, if you've got some property to go with it, it makes your entity more appetizing to these carriers. If that makes sense.
Yeah, sure.
Uh, but yeah, the higher deductible, like I said,
Not right or wrong.
goes,
It just depends upon your risk appetite as an
yeah, it
investor.
depends on your risk appetite. But it's definitely beneficial. And if you're in the position to put away a certain amount of money, and you might even could just make a fund, for, let's say, renovations, or if your air conditioning unit's 20 something years old, you're probably already going to be putting money aside because it's going to be replaced at some point at a certain time. So it's just I would suggest having that fund and taking a higher deductible is very beneficial in the insurance game.
I love it. Let's open this up for questions. I know we don't have 55 people on here today. We've got some really some of my favorite people on here, of course. But does anybody have like some questions for Keaton as about insurance? I know it sounds, again, like not the most off the wall exciting thing, like, spitting fire or something, but this is the kind of stuff that can make or break deals, that can extract some more juice out of an investment. Otherwise it would just go to somebody else. Somebody want to start off with a good question or thought?
I have a question.
Yeah.
Okay, so earlier you guys were talking about how you needed to know about the roof, number one, the electrical, number two, and so on. You said you needed to know the age of the roof and the square footage and whatnot. do you need to have a professional inspection done for you to gather this information, or do you just need the information about like the general overview of the roof, for example?
It's just best to have the most accurate information that you have, and relaying that to your agent. Now, some facilities that are harder to write, a little more banged up, have a little age to them. Depending on the carrier, sometimes the carrier will require a professional inspection beforehand, but that's not the case all the time.
Mhm.
It really just depends on the quality and the age of the facility and what these underwriters come back with. Sometimes they're comfortable without. They have enough information that they're comfortable writing it without an inspection, and sometimes they require an inspection in order to bind the coverage.
Yeah. And so most of the time, I guess it sounds like you guys just take the word of the um, policyholder or the owner of the
Yes.
building.
Yes. So
Okay.
whatever you relay to me is what I regurgitate to the underwriters.
Yeah.
So like I said in the beginning, having the most accurate information possible and communicating and providing as much information as you know to whoever you're working with is most beneficial to you.
Okay. Cool. And Nolan, I think a good addition maybe to our next update to the collective might be um, if we have this big checklist of things that we need to know before taking down a property. Um, this is stuff included. So like, you know, the age of the roof and everything that your insurance agent needs. Is that on that document already, Nolan,
Yes.
that you have pulled up?
Yeah. It's right here.
Okay, we can include that all that stuff on there too on the checklist.
Yeah, and I can write up kind of a script or more details um,
Mhm.
if you guys would like to see that.
Here's a quick question. I mean, if I don't want to be that guy, but what happens if you give inaccurate information? I mean, I'm not gonna, I mean, we've all heard of insurance fraud. I'm not talking about that. I'm just asking, like, what if, for example, you don't know the age of the roof, for example, that is an important piece, and you heard some information from the previous owner. Oh yeah, we did this and this, and you didn't stretch the truth, but you heard it from the previous guy. Like, where's the liability there? Like, if you say, hey, we put a new roof on this thing in 2008 or whatever, right? And you're
Yeah,
like, oh, this is what I was told from the previous owner, but there's not like a documentation when it was put on. Like, where who and then the wall and everything caves in. Who's liable for that? Like, what's the sitch there?
it depends on it depends if the carrier decides that it's enough to chase after. A
Okay.
lot of times, if it's a big case and something's severely wrong, then it turns into a massive lawsuit. But these carrier companies are in so many different legal battles that a lot of times it's easier for them to just pay out, regardless if it was incorrect information. So like I said, it depends. And most of the time, you can relay me information, and then I will be able to pull more info from the internet, and the carriers have these certain algorithms, or some of them have even started using AI to find more information. And if I provided something that's wrong, then they'll come back and say, "Hey, this is what I found." Let's say you said the roof has been replaced in 2022, and then they look up all the property information and it pulls and says the roof has never been replaced. Then they'll come back to me and say, "We don't have any proof of this. We need proof."
Okay. Gotcha. Understood. Who else? Who's got something else on their mind?
Hey, Keaton, my name's Parker. I got a couple questions for you, if that's okay.
Yeah.
I was looking here too, just kind of like could you kind of go into depth on just like the difference between like the needing like a phase one and a phase two? Just because in the one or two properties I bought, we've only needed like a phase one to get like a normal insurance, but then we're selling it here, and then the purchaser's insurance is requiring a phase two. Any reason like why that would be the case?
What do you mean by phase one, phase two?
Environmental.
Like the environmental.
And they're requiring you to go to a phase two?
Well, the our
Probably the
our
bank,
our
the lender's probably requiring that environmental study, right, Parker?
right, yeah. So she's, I guess, more of a lender versus an insurance, I guess.
Yeah.
But
Yeah. A lot
and
of
then what about,
times, um, you know, if the banks weren't involved, a lot of people, insurance isn't required. And I have certain clientele where, it makes sense for them to self-insure. They have enough money. But when the banks come into play, they kind of dictate where you go and you're required to have it. And sometimes they're very difficult. I'm sure you understand
oh yeah, more than I care to admit.
that.
Also too, sorry, I'm at the airport here, but um, with in regards to like an opportunity zone, like I'm not sure if you have any experience with that. Like, do you see like a opportunity zone being like? I mean, in my mind, I would imagine to be, it's going to cost, it's going to be more costly for an opportunity zone property versus non opportunity zone. Can you
Yeah.
just kind of walk through why that would be the case, or a potentiality to, I don't know if you have any insight into how it'd be a good thing to try to take down a property in an opportunity zone in regards to
Yeah. Well,
insurance.
and they're, and with these opportunity zones, yes, it's going to be higher. Rate is going to be higher because what they pull is basically demographics of the area. So it might be an opportunity for real estate to grow, but the crime statistics, the weather statistics, the traffic, uh, the history in that area is what the carriers are basing their rates off of. So it might be an opportunity for an up and coming area, but when they pull it up, um, it's going to show the crime statistics from the previous year. So that's what they're basing their numbers off of, is trying to predict the future. And so they're usually insurance lags behind a few years. Um, it's always been old school. I don't know if it'll ever be ahead of its time. Um, so if statistics were rough in the past, more than likely the insurance company's numbers are still going to follow that, but it could change as time goes on. So it might be high at first, and if the opportunity uh, becomes a up and coming area that's much nicer, you might see a decrease. But with property's been very, very tough with all of the weather mishaps all over the nation the past couple of years, really. And then prices are also going up because of inflation. So what we're insuring is not the market value of your property. We're insuring what it costs to replace it. So let's say
Big
your
difference.
building cost $1 million. Well, now they're basing it off of what it would cost to build that today. So what have we seen? Materials have increased, labor has increased, taxes have increased, everything's gone up. So the rate that you see is what they have calculated replacement cost to be to rebuild that facility of like quality.
So that makes a lot of sense. Appreciate
Yeah.
that.
Yeah.
So
And
you
not
got to spend a lot more money to get the insurance down, right?
Mhm.
Yeah, and not to mention too, Parker, on top of that, so as insurance, as you understand, they if the price of something is $1, they're going to charge $1.30 in order, and this is just reality. They charge $1.30 for that same cost in order to bump out all of their administrative costs, all of their commissions, and then they also take a little bit of that piece and they put it on the side in case of the what if, and then everything else underneath that goes back in the form of a dividend. It's also in property and casualty. It's in Geico. It's in Aflac. It's in life insurance. It's everything. They overcharge to make sure that they're that's why insurance companies are the safest, most predictable best mitigators of risk in the entire world because they overcharge their premiums, not in a insidious way, but just in a risk mitigation way. They overcharge in the premium, and then what happens is over time, that money, if you are an investor, it'll get refunded back to you. And most importantly, if you purchase property in those OZs or those other locations that are outside of maybe these are the most government regulated spots. It gets a little bit outside of supply and demand. I think it starts to interfere with some government. So I don't know. My opinion really is like when you start introducing the government, they get involved in it, and then you have the insurance company with their opinion. It just convolutes everything together. Am I crazy?
No, that's correct. You're nail on the head there. And with like I was talking about the replacement cost, even being in these opportunity zones, is making sure, depending on your financial situation, making sure you're insured to value. So what I mean by that is, let's say you bought the facility for $1 million. Well, the insurance company, their valuation is 2 million. And you're like, no, 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 it's not worth 2 million. And they're like, yes, it is. It's like, well, we want to use 1 million. So we rate it as $1 million building. Well, technically you're rating at 50% of their insurable value. Now they would never go to a 50%, but I'm going to use that as an example. You're insured at 50% of their value because they wanted 2 million, you want to insure it at 1 million. Well, if you get $100,000 claim, what do you think is going to happen? They're going to say, here's $50,000 for the claim because you're insured at 50% of our value.
Oh, sure. Put you at a
Uh,
disadvantage.
Say that again.
So it puts you at a disadvantage.
Yeah, yeah. And most of the time, like usually what I see a lot is 80 to 90% insurable value. But it's really best for 100%. Like I said, it depends on your financial situation, but if you buy insurance, you buy on price, you die on price. Um, it's just one of the bullets that you have to bite. And there was a company a couple years ago, I'm not going to throw them under the bus, but they were the cheapest by far, by like 30%. And everybody loved them. But they were the cheapest because they third party all of their back end work and their claims. So when you had an actual issue, you were no longer dealing with that company. And everybody's like, hates the insurance guy, hates the insurance company. Well, you paid for the cheapest option.
That's right.
And then when there's more expensive options, now, like I said, trust your guy on this, they should know. Usually you get what you pay for. I'll use Chubb as an example. Chubb is a phenomenal company, always has been. And it's because they have one of the best teams on the back end in the world. Now you pay a little bit more, but it's worth it in the long run if you do have issues.
Chubbs was a great golfer. I mean, he was on the pro tour with Happy.
That's right.
No, honestly, Keaton makes a great point. The thing is, at the end of the day, when I discovered, especially I'm in the life insurance business as well as real estate, there is no better way to describe this. There are no deals in insurance, meaning if somebody is offering you a cheaper price for something, that means they're taking on greater risk. It's just mathematical. It's actuarial science. It's what they'll do is they'll group together. If it's life insurance, it's 10 million people. If it's real estate, they'll group together 10 million. I don't actually know the actuarial science behind property, but it's a group of massive amounts of real estate. And it's a science on how they go and underwrite and actuarial create those actuarial tables. So if you think about it, if you pay more, you take on less risk. If you pay less, you take on more risk. It's just levers. I mean, that's what I've discovered. And that's why it sounds hilarious, but you just nailed it. You get what you pay for. Someone that's only thinking about the cheap option, they're not thinking logically, they're only thinking small or thinking cheap. They're more likely than not either going to burn that money through, or they're not going to be getting a return on whatever their insurance policy is going to be. They're going to get a 1-800 number and hope they get a claim, you know?
Yeah. Yeah. And
So
another thing that for you property guys and girls, that I've seen a lot of is knowing the difference between your deductible and a wind hail deductible. As of really the past year, I've seen a lot of wind hail deductibles added to property. So the difference is, let's say you've got a $10,000 deductible. Your agent might call them an AOP deductible, which is all other perils. Your wind hail deductible is going to be based on a percentage. So let's say Travelers. I quoted one with Travelers the other day, and we used a $10,000 deductible, and they put a 3% wind hail deductible on it. So wind hail, that's going to be like your hurricane, your storm, hailstorm coverage. Well, you've got a building that's valued at $10 million. With a 3% wind hail deductible, your deductible is no longer 10,000. It's 300,000. And so be wary of that. But in certain cases, like Travelers is requiring wind hail deductibles on their properties now. Now, most of the time I'm seeing this in more coastal regions, and that's going to be, I do a lot in Mississippi, Bama, and Florida. And they're going to be a little bit heavier there. In Florida, I'm seeing minimum 5% wind hail deductibles. So just be aware of the difference in an AOP deductible and a wind hail deductible.
got it. Understood. Who else has something for Keaton?
I got another one for you.
Yeah.
So let's just say, for example, I got a building under contract, has an existing tenant in there on a triple net lease. And forgive me for my ignorance here, this might be a dumb question, but when does the actual first payment start? Because the bank, I guess, requires an insurance policy before lending on it. But I'm also assuming that the insurance company requires you to own the building and close on the building before, insuring it.
Yeah.
So how does that work in terms of actually paying the first, getting the policy started?
So it'll be subject to your effective date. So let's say Goldenrod for Nolan's newest facility. He wasn't closed on it yet, but we knew the date, the need by date. So when you provide all the information about the facility, whether you close on it or not, you don't have to pay it until the first 30 days that it's effective. So let's say I know I've been working with Nolan on his facility and he's closing on it November 1st. Well, I'm telling the underwriters that the effective date is November 1st. So we're evaluating it beforehand. And when November 1st comes around, you're bound. And some make you pay immediately, usually some sort of down payment at least. But you have those first 30 days to make the first payment. And like I said, you make the effective date, let's say the day that you become the owner. Does that make sense?
Okay.
And you basically,
Yeah.
so basically, Zane, I would say on the same page, Keaton, that if my mortgage payment, I don't have to make a mortgage payment the first day that I borrow their money. I
Yeah.
usually have 30 days. So what I like to do, especially with my tenant, I like to get a security deposit and then I get first month's rent. So by the time the next month's rent comes up, I've already got cash that I can pay my mortgage and my insurance premiums. So that way I'm not really coming out of pocket. Is that fair to say, Keaton?
Yeah. And most of the times, the underwriters will work anywhere from 30 to 60 days out. So if you're working on a deal and you're needing to calculate your insurance, you're probably going to have numbers 2 weeks before your closing. So then you can kind of calculate where you need to be um,
To
in
have
your
your tenant
insurance rates
reimbursed.
for your tenant.
Yes. And you can it's not even negotiation with your tenant. It's more about just an information. Hey, by the way, I just got my quote back from my insurance guy. You can go out there and chop this up with somebody else, but know that, like I said earlier, I'm out here on the front lines grinding for you, trying to reduce this payment as much. Or most importantly, here's a la carte of a couple things that you might want. Like I said, one of my tenant over in Tarrant, I asked him if he wanted this, this, and this. He's like, I don't want to pay for flood insurance at all. And that's why I was like, all right, well, I'll pay for it. And I hope you're building floods. Not in like a, I was like, I don't care. If you're not wanting to pay for it, then your ass out of luck. I don't care, whatever. But most importantly, figuring out what that cost is going to be. You present that to your tenant like the 2 or 2.5 weeks before closing. They can come back and say, hey, I like this, this, or this. And then I can go back to Keaton and say, hey, my tenant would prefer to have this. Because again, you can your tenant's going to reimburse those costs to you anyway. So if I go to Keaton and say, hey, by the way, this guy wants this additional rider, which in case the building blows over with the tornado, they want rent reimbursement or whatever it would be.
Yeah.
Uh, he can run those numbers and say, hey, okay, that total monthly premium is going to be $1,109 a month. And I send that to my tenant. They say, are you good with this? Perfect. I send them a DocuSign. They agree to it. And then I send that to my banker. It's all in the blueprint, if you can see. And then once we go to close, I'll be able to draft that global amount of base rent, tax reimbursement, and insurance reimbursement. So every single month, when I get that extra $1,109, that money doesn't go into my pocket. It goes over to Keaton, his pocket. And every single month, he's the one that, and in exchange for that insurance payment, we have insurance on our building, but I'm not the one paying for it. Does that make sense? Cool. Okay, thoughts, questions. I know we're getting down to the wire here. Anybody else have kind of a couple last questions for Keaton in his somewhat kind of Harry
Hey,
Potter classes expertise?
hey, Keaton, appreciate you being on here. What questions would you have that would help us to be able to find an insurance agent? What kind of questions do we need to ask them? What kind of things do we need to know to be able to find the right person?
Questions to ask your insurance agent. I would just say,
Yeah,
uh,
when you're building your team and you're looking for that agent for the first time, how do you filter through all the options?
for me personally, I only do business through warm leads. So I know a guy that knows the guy. I'm not picking up the phone and dialing. I'm not cold calling. Just the people that shop you will shop you the following year, and they're really just shopping on price. Um,
Question:
finding
where are you
your,
licensed, buddy? Are you licensed in Indiana or not?
I'm licensed nationwide.
Okay, well then, Dad, you got a lead right there, baby.
Yeah, and you guys can use me as well, or call me with any questions. Um, and I might be able to even connect you to somebody in the area. Um, but yeah,
I mean,
you're
I
good.
know I got connections with all kinds of different insurance agents, but this is a new level for me to think about what their competency is, what their skill level is, what their experience is, because everybody's on a billboard. So,
Right.
so how do we get below, past the advertising, past the marketing, to find out what someone's skill level is?
Good question.
I would say ask for a marketing summary, seeing where their declines were, why did they go here, or even calling them and asking them straight up, where would you go with this? Or what companies similar to me do you already write? So my expertise really is in real estate, and then we've got 9 other producers at my agency, and two of them specialize in contractors, another guy's more private equity. We've got a multifamily team. Um, so it's really just word of mouth. I would ask for marketing summaries or ask the hard hitting questions up front. And if they can't answer on the phone, probably not your guy.
Okay. That's you mentioned a good point because the experience in the real estate arena would be crucial versus just asking somebody if they could write a policy on a commercial building. Well, yeah, I can do that. I've done it once before, and
Right.
then finding out if somebody does it, almost like their specialty.
Yeah. And we've got, like I said, I think the question of, well, who do you write that's in the same boat as me? Or have you written anything in this area? And can you tell me a little bit about it and what you've done, what
Good.
you provided for that clientele and how you approached it?
Okay, great. Thank you.
Yeah. And I'll say a couple things that are appreciated by the carriers that I've seen recently. Um, Sprinklers. If the building is sprinklered, there's usually a discount. Mostly 100% sprinklered. Um, Gated, controlled access, central station alarm, and cameras are all pluses as well.
Those are cheap
Um,
costs, not sprinkle, but the security is crazy cheap. Putting
yeah,
a putting a camera out there for $400 is crazy cheap.
yeah. Um,
Making your tenant pay for it, and it's also easier to lease.
Yeah. And I'll say this too, your tenants do play a factor in your rate. They're going to ask me who your tenants are. One of the difficulties I've had right now is I've got a 4-story office building, all medical law offices, which is they'll write that all day. Very little risk there. However, on the first floor, there is a hibachi restaurant. So your tenants play a factor, and they're like, "Oh, the hibachi restaurant's going to burn the whole building down, and then all of these other offices are done as well." Um, my father himself has a facility with a daycare in it. Anything with children is high liability. Um, his
They'll come to my house.
his insurance went up $600 a month just because there was a daycare uh, in the building. Um, a child falls down the steps. Usually it would be on the tenant, but who's the facility owner? There you go. It's passed along. Um,
The mustache guy from Monopoly. He's in charge. He's the bad guy.
yeah, no one there.
That's right.
Um, let's see what else.
I would say the majority of what we're looking for too, Keaton, is that light industrial. We try and stay away from, babies and
Retail, yeah,
bocce and things like that. It's mostly focused on fabricators, supply, distribution, like those types of buildings and
yeah,
businesses, because they're just, you're dealing with entrepreneur business owners, blue collar guys that don't they're not taking their kids to school. They're not having their dogs run around. It's very
yeah.
business oriented,
Hmm.
which I think reduces the risk because you've got people that are focused on making a dollar versus making people happy.
Right. Yeah, 100%.
Anything else as we get moving? I know we're getting down to the wire. I'm sure a couple of people have some 2 o'clocks, myself included. So before we get rolling, anybody got anything else on the outs? But for Keaton, awesome.
Good.
Well,
Thank you.
yeah, awesome. It was really great. Obviously, here's what we'll do too, guys. Um, like I said, I appreciate Keaton kind of coming on blind like this. He crushed it like a champ. If you guys need his information, I believe he's already on our contact list. I will make sure that I update it if he's not already. But if anything else, if you have any type of insurance questions or whatever, he can handle it. He will grind and work for you. He's all about it. The only reason I say that is because he's done that for me. I've felt I've felt the experience of how hard he works, and I'm not just saying that. He's done it. He's proven it. And if and when you need that, I will, of course, direct you to him directly. But if you need something on the front end, I will connect you with him immediately. Sound good?
Thank you so much, Keaton.
You got
Awesome.
it.
Thanks,
All
Keaton.
right. Thanks so much, guys. Appreciate it. We will get this thing rolling.
All right. See ya.
All right, guys. Have a good afternoon. Thanks so much. Good weekend.